Hey, what's going on, guys? Blood Phantom 81 here. Welcome back to my channel. I hope you're having a great night or a great day or whenever you're watching this video. Today I wanted to give a mid-December recap and kind of my last recap before the year ends, or maybe second to last. I still don't know yet. It really depends on how much happens in the market between now and then. But definitely a lot has happened this week and kind of a little bit last week. So those of you that are fortunate enough to be my subscribers, you'll know that we've been looking for the market to head even lower. And even from this point right now, I still think the market's going to head lower. And just to reiterate, just in case there's new subscribers or people that haven't watched my videos before, the price target that I'm looking out for the S&P 500 is around 2,400. And for the NASDAQ, it's about 56 or 5,700 around around there. But overall, I just want to instill some confidence in you guys. I don't think this is the start of a recession. Obviously, I can't say that with 100% certainty. Obviously, I'm just some guy making videos on YouTube and stuff like that. So you guys don't have to listen to my advice. But I did think that this move was overextended. And I do practice something called Elliott wave analysis. So I was looking for a move pretty similar to this. And that's why I have a very specific price target of 2,400. So the confidence that I want to instill in you guys is the two main ways to take advantage of this kind of correction is basically this. Number one, if you're a long-term investor and you have something like M1 Finance and you're doing daily deposits, you are doing the right thing. Okay, you're buying even if the market's red, even if the market's green. And M1 Finance obviously has that that pie system that'll put more emphasis on stocks that are down more than the other stocks. So that's awesome. I will say, if you want to step your game up, in addition to having something that you do daily deposits on, where you'll invest every single day, no matter what, obviously this correction is already, how down are we from the 52-week highs? We're already down maybe 14%. So this advice may not mean as much at this point in time, but I would recommend kind of like a stock savings fund, because there's a lot of people out there that are fully invested in stocks, and they've been fully invested in stocks for a really long time. So they don't have the capital right now to take advantage of these opportunities. Maybe that's you, and if so, that's fine. Obviously, we're in this to get better at investing and stock trading. But I will always recommend something like a stock market emergency fund. In case the market drops 10%, you have this much money. In case the stock market drops 20%, you have this much money, and things like that, which I think over the long term is a little bit better than something like a daily deposit where you deposit money no matter what. So that's basically one way to take advantage of this, which is M1 Finance, daily deposits, things like that. The second way to take advantage is to do very aggressive trading, which is what I do. So as I film this video, I am probably maybe 70% in cash still. I'm just waiting. I'm just waiting for the prime opportunity to get back into the market. I won't fully disclose the kind of things that I'll be buying, but it's mostly going to be revolving around tech, because I think tech has the highest risk, but it also has the highest reward. So I'll be looking to get into some of the tech stocks that are at least $100 billion in market cap. And that's kind of my strategy at this point. However, as we can see from a S&P 500 map, you can find this on Finviz. This is actually very helpful. As we can see, this is a S&P 500 wide correction. Okay, and one of the brightest spots here on the right is Johnson & Johnson. So there's been a lot of videos on YouTube made about Johnson & Johnson, so I won't go into that much detail about it. But I will say that I probably own a couple stocks right now, or a couple shares of Johnson & Johnson. Let's see if that's true. So it's at 129. Oh, I have 3 shares. Okay, so I have three shares averaged at 132. I don't mind if my total Johnson & Johnson allocation goes to $1,000. actually, that's kind of my goal. I want this to be close to $1,000 at some point. So obviously my average cost is pretty awesome at 132. A lot of people's average cost is much higher. But I plan on scaling down on this. And as you can see from a long-term time frame, these two moving averages that I'm looking at are still sloping upwards. But the closer that we get to this 200-week moving average, the more aggressive I'll be a buyer. So something like 121, 120 is a very ideal spot to be very aggressive in Johnson & Johnson. So we'll see if we get there. Yeah, I guess one more stock that I've also been purchasing is Costco. I think it might be easier to go through here. So Costco, I currently have 2 shares here, averaged at $204.99, or basically $205. Pretty okay average cost. This one I'm also prepared to have something like $800 or $1,000 at some point. But the point I'm trying to make is, even though I have a very clear goal, I have a very clear emphasis in tech stocks, I plan on doubling my money at some point, the money that I have right now. And I actually plan to have a very, I'll just go ahead and say it. So I do plan on having $100,000 in my Robinhood trading account by the end of next year. That's a goal that I have. This is the first time that I'm making that public, actually. So very excited to see that play out. That's my goal right now. And I do think that tech stocks are going to be the main reason for why I get there. But even then, I can't resist opportunities like these that are presented right in front of me. Something like Costco, currently down. If you look at a 3-month chart, they're down about 12%, 12.6%. More specifically, off the 52-week highs, they're down about 18% or 17%. So still some more potential to go lower. It's very likely that we come and test at least one of these moving averages, which is the 100 or the 200. But I will continue to be a buyer of Costco. I just want to say, have an open mind. Don't just buy tech stocks if that's your goal. Definitely look around the market and see what kind of deals that you can get. There's definitely a lot of deals to be had. And some of the more defensive stocks like Microsoft and Visa, which are still high flyers but still particularly defensive, I would be a little less aggressive on these. And I don't know, it goes both ways. I'm just saying from my personal experience. I would probably look for Microsoft if we get to maybe $92 or something like that. That's kind of my price target for it. I don't know if we'll get there, but the point I'm trying to make is there's a lot of high-flying tech stocks that have already been hit pretty hard, and that when the market recovers, these things are going to completely take off. I'm talking about your Netflix, your Amazon, not Facebook. I'm not a fan of Facebook, but definitely Netflix, Amazon, things like Nvidia. Amazon currently residing around the 100-week moving average. I might as well scoop up a share tomorrow. But yeah, so depending on how much cash you guys have, or however your trading strategy works, I think there's a couple ways you can take advantage of this market opportunity. I'm just giving my personal kind of philosophy and how I plan to take advantage of this. And I do consider myself an above average trader. So I want to give some insight to how I trade, and maybe some of you are just starting out. And I always think it's helpful to look at what other people are doing, especially if they're a little bit more experienced. So I'm just giving you guys my insight. Take it as you will. With all that out of the way, good luck with everything, guys. Feel free to post comments and ask me questions about anything. I think there's some very, very awesome buying opportunities among us. So yeah, exciting times ahead. Have a great day and good luck trading.